Ladies and gentlemen, good day and welcome to Maiden Forgings Limited H1 FY24 results conference call hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kaushal Shinde from Kirin Advisors. Thank you, and over to you, sir.
Thank you. On behalf of Kirin Advisors, I welcome you all to Maiden Forgings Limited H1 FY 2024 Concall. From the management side, we have Mr. Nishant Ghat, Managing Director. Now I hand over call to Mr. Nishant Ghat. Over to you, sir.
Thank you, Kalpesh. Good afternoon, esteemed participants. I extend a warm welcome to each of you joining us for the conference call of Maiden Forgings Limited, where we aim to delve into our exceptional performance during H1 financial year 24. Before we delve into the specifics of our financials, allow me to provide a succinct overview of our company and its transformative journey. Maiden Forgings Limited has stood as a pillar in the manufacturing industry for the past 35 years, specializing in a diverse range of bright steel bars and wires and now pneumatic nails. With multiple production locations strategically situated around Ghaziabad in the NCR region, encompassing a total production area exceeding 1 lakh square feet. Our comprehensive in-house manufacturing facility, inclusive of testing, pickling, and annealing, positions us as a domestic leader, offering bespoke solutions and a continuous stream of innovative products for our discerning customers. We take pride in reporting that our strategic and marketing initiatives, coupled with the successful IPO funding, have yielded impressive results, contributing to commendable growth in our financial performance. In the financial year 23, the company achieved a total revenue of 221.15 crore with an EBITDA of 22.31 crore and a PAT of 9.61 crore. I am pleased to share that the first half of financial year 24 has commenced on a positive note for Maiden Forgings Limited, despite the challenges posed by the IPO costs and other developmental costs. We have witnessed noteworthy growth in our financial performance, and I am excited to report that the strategic and marketing initiatives we have implemented are now bearing fruit in the second half of the financial year. Commenting on the financial performance of H1 financial year 24, it is evident Maiden Forgings Limited has showcased remarkable resilience and strategic progress. In H1 24, the company's total revenue witnessed a substantial upswing, reaching 116.29 crore from 108.64 crore in H1 financial year 23, reflecting a noteworthy 7.04% growth despite the listing during the same H1 24 and implementing strategic shifts during the same tenure. The EBITDA surged to 11.29 crore, a remarkable 11.72% year-on-year increase from 10.10 crore in the same period last year, accompanied by an impressive EBITDA margin of 9.71%. The profit after tax reached 4.18 crore, showcasing a year-on-year growth of 1.19% with a PAT margin of 3.59%. I would also like to highlight that this is the adjusted PAT after considering certain one-time expenses relating to the issue and the market development with long-term objectives, which sums to be around 10% of the current PAT, roughly, thus enhancing the actual PAT significantly. These key financial indicators highlight the company's proficiency in generating revenue, ensuring operational efficiency, and maintaining profitability through the first half of the fiscal year. Looking ahead, our optimism for the remainder of financial year 24 and beyond is based on the success of our IPO funding, positive outcomes from strategic initiatives, and the wealth of experience within our team. A bright future is envisioned for Maiden Forgings Limited. I anticipate even stronger growth in the near future. The opportunities before us are vast, and we are diligently working to leverage them for maximizing value delivery. As we mentioned in our earlier investor meets and roadshows, that our focus is on strategic transformation and its execution post-listing. That contributes to the short-term goals but helps us create larger value for the long term. And we are right on track in achieving these targets. This H124 result is a testament to our policy wherein we incurred certain expenses in order to get even better clientele globally than what exists today, which has potential to give snowball effect in enhancing our sales in the coming quarters. Such efforts helped us acquire certain customers with a very high lifetime value, and it also helps us to create brand Maiden by supplying to customers of such high appeal. This makes us even more certain of even better future value creation. Before we delve into the question and answer session, I want to express my sincere gratitude to all our stakeholders for being an integral part of our growth journey and the Maiden family. Your support and involvement have played a crucial role in our success, and we genuinely appreciate your valuable contribution. With this, I would like to open the floor for questions and answers. Thank you once again for your presence and continued support.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Miraj from Arihant Capital. Please go ahead.
Thank you for the opportunity. Good morning, Nishant sir. I just had a few questions. Starting off with, sir, I believe the H1 performance is similar to what FY23 was, but if you want to look at our guidance of 20 to 25% growth, how are we placed in H2 right now, and what kind of growth do we expect in H2? That will be my first question. Secondly, if you could just delve a bit into the new avenues, our exports, how are our exports looking, and other our value-added products, what kind of contributions have happened in H1. If you could just give some more insights in those aspects as well, including the coil the new product that we had introduced. If you could please give us some more insights on that as well.
Can I take, am I connected?
Yes, sir. Yes, I can hear you.
Yeah. Hi, Miraj. It's always a pleasure connecting with you. You asked me, first question was H1 and H2, H1 last year and H1 this year. See, there is I mentioned in my speech as well that, we got listed in the same H1 and financial year, and we were also doing strategic shifts like I have told you earlier certain times also. And also I mentioned in the speech that we are gaining we gained certain clientele globally, which is giving us now, a snowball effect, and this effect will obviously increase in, coming quarters, not half years, but quarters. So talking about there is overall around in top line 7% growth, 7 point something percent, and in what happened was if you compare last year, the average monthly sales, if we total up, it will come out to be from 17 to 18 crore per month. But from September onwards, the run rate that we have achieved is around 18 crore, and about 20-25% above that. We are ranging now in line of 21 to 22 crore per month at the moment, the current run rate from September till date. And this is expected to increase from, on month-on-month basis now. Now we are calculating the growth on month-on-month basis from the top line as well as the bottom line. So that is a shift because we were doing certain developmental work of, acquiring new bigger clients, like one of the companies, Fortune 500 global company that we have added, and we have already delivered 2 of its container, and the new PO has come up. So that company only can give us, orders worth like 2-3 crores every month. So that is one incremental impact. This includes all the value-added products, which includes stainless steel, bright brass wire. Then there are certain 2 or 3 domestic brands that have been added recently from, say, September and October onwards, whose volumes are increasing on month-on-month basis. Plus, as you talked about the coil nails business, we already have become member of, Specialty Tools and Partners Distribution Association of USA. We are associated to that, and multiple customers from there have already, started taking supplies from us. So overall, we have reached around, per month run rate of 22 crores, and this is expected to grow on month basis. So we, by last quarter of this year, we would be targeting around 25 to 26 crore of monthly sales. So that is how, if you calculate that run rate, we can comfortably achieve 20 to 25% growth within this fiscal year, based on the improved effects of developmental work done in H1, and the effects being fruitified in second half of the financial year. And of course, in the coming financial year, it would be far more better.
Understood. Thank you for the reaffirmation, sir, on that. That sounds good. Sir, on the collated nails, pneumatic nails, and the export part, so if I'm not wrong, in FY23, pneumatic nails were a very small portion of our entire contribution.
Negligible.
Yes, sir. So how does it look in H1? And I believe we want to scale it up all the way up to 15 to 20% in this year itself. So how was it in H1?
Correct.
If you could just share some light on that.
Actually, Miraj, I have just worked out through the balance sheet. I haven't worked out exact data, but yes, it should be in H1. It should be around 5-6% the contribution minimum.
Understood. And also on the sheet, since we are on the topic, sir, I was seeing that our inventory levels are a bit high. So when I'm comparing it to FY23, so is this for the coming deliveries, or are these the raw materials or finished goods?
We are slightly, when we are talking about the nails business, right? Earlier, our delivery pattern was 2 to 3 years. Plus, stainless steel, like carbon steel, has a time period of delivery of 2-3 days maximum, right? But in stainless steel, it goes up to like 30 days, right? And I mean, the competitors are doing at 60-90 days delivery. We are doing it at 30 days. So stainless steel bright bar contribution has increased. So because of that, there is a certain increase in inventory. And secondly, like if we are doing nails, so then nails turnover time from the wire rod till the nail has will increase a bit as compared to the wire. Wire is a 2-3 days delivery model, whereas in nails you require 10-15 days to process it, right? So that is one reason. Plus, right now the focus was more towards adding more value to the bottom line and top line. So yes, earlier also, if you remember, I told that next 5, 6, 7 months or 8, in fact 9 months from the listing date, I am saying. Okay, at that time I was saying that they would be more about increasing the sales and the profit, and the optimizing process will start post that. We are trying to manage it best at the moment, but yes, if you say once we have reached, like I am saying, 25 crore kind of monthly sale level, then we can start optimizing depending on what new, like we have acquired new customers. At least I think, as per my estimate, big, small, all kind of customers, if we add on, in last 6 months we would have added around 50 to 70 customers, new customers. So based on their requirement, we have to increase the inventory initially, and then as we get habitual of like what size and what grades they require regularly and how much quantity, then we can start optimizing those stocks. So that
understood. And just last question before I get back in the queue. So the utilizations would be at what level right now? Because in collated nails itself, we are targeting a very strong utilization, almost 90% in this year. So what would be
Right now,
currently?
the collated nails utilization would be around, I won't say collated nails, but the nails plant utilization, because we are also doing certain stainless steel nails which go in loose form, right? So
Right.
I would say around 35 to 40%.
Okay, and we're still on target to take it to 85 to 90%?
Yes, we are still targeting that. Same.
Perfect. I'll get back in the queue, sir.
See, I am targeting 25 crore monthly sale run rate by January, February, right? So
Right.
we are working on that, scenario, and I think nails would be contributing a lot to that.
Understood. Based on that, the inventory level should stay similar only going ahead, right?
Yes. Inventory level, I can't comment that, within this half year it would be reduced or not. It should be, but it would be or not, I am not sure for this particular fiscal year. Then from next year onwards, definitely we would be optimizing. Either at the same inventory, the sales would be much higher, so it's automatically optimized, or, we would be optimizing and doing a parallel thing. That still I need to figure out exactly.
Understood. Perfect, sir. I'll just get back in the queue. I have a few more questions. I'll get back in the queue. Thank you.
Sure, Milan. Thank you. Always pleasure talking.
Thank you. The next question is from the line of Pranay Jain from Deal Wealth Capital. Please go ahead.
Thank you for the opportunity. I wanted to understand what is our order book position presently, and what is the pipeline looking like on the exports front for the next 12 months?
So, hi, thank you for the question. First of all, if we talk about the current order book, it's around 35 crores approximately at the moment. But like I said, the maximum delivery time for one of our products is 30 days. So normally it's on the monthly basis. So you can say simply, if we are running on a 22 crore kind of a run rate right now, then we have order book of around 1.5 months, which is very good for our industry, first of all. And secondly, if we talk about the export fronts right now, I think in pipeline we have orders of around 3 crores approximately at this point of time. And for next 12 months, we can expect a contribution of 15 to 20% of our total sales in our in the export sales part. Minimum, because one of the company that I mentioned earlier in the questions of Miraj, if we get what we are expecting out of it, and it should be there because they are highly impressed with our quality and services, so that might give even a better boost.
Earlier you commented that compared to last year, we have 50 to 60 more clients, and your conversations with them, plus getting part of associations like the Fastener one in US. All these initiatives are going to help long term in top line, and I believe that many of these new products will also be margin accretive. So I wanted to understand what is our EBITDA margin aim over the next couple of years, from 9.7, 10% where we are presently. Where do we see this in 2 years' time?
In 2 years, I think I am, I think I am not supposed to comment on that over here. So I would, I would refrain from that question. But yes, it would be definitely positive, much more positive than what currently it is, because the timeline that we are targeting for, to see a significant growth in our top line and bottom line, that is exactly 2 to 3 years, like FY24, 25 and 25, 26. that is the time when we would be, maximizing that would be time when we would be starting getting the best result out of, that we will gain post from the funds that we got through listing, and the entire the best optimum result should come by then. So it would be significant improvement over past years in the coming 2-3 years in terms of
presently, basis the capacity that we have, what is our average utilization level? And as part of your utilization,
last year approximately. Sorry, please continue.
And as part of the utilization of IPO proceeds, whatever expansionary activities you are taking, by what is this capacity going to increase? Which are the higher margin products where this new capital is going to be deployed? Because we want to understand, since you are focusing on adding more value to bottom line in the long term, we want to get a better sense of what the PAT margin is going to look from 3.5% presently. Is it going to be 7-8% in a couple of years' time or not?
Yes, maybe. Again, see, I can't get into specifics at the moment, but yes, definitely it would be far more better, far better what it is right now. And secondly, like you asked, at the IPO time, most of our funds are getting utilized for growth in better value-added products such as stainless steel bright bar, such as pneumatic coil nails and plastic collated nails, and as well as now paper collated nails. So definitely the margins, the gross margins in those products lie from somewhere in the range of 20% to 30%. So definitely the margins are bound to increase, because from vis-a-vis last year, the contribution of these products in the overall sales has increased by a certain percentage, and this is because the new customers that what all we are acquiring for these products. We are not very much focused on the products that we were doing earlier. So we are increasing the sales and customers in who buy these products. So definitely the contribution will improve on quarter to quarter basis, and that would definitely help us reach in 2 to 3 years with a much better PAT and EBITDA margin. And plus, at the same time, the interest cost and everything would be dropping, because of the cash flow that we get from, selling higher value products. So definitely the interest cost and everything would reduce on year-on-year basis, and that would, in fact, raise the level of PAT as well.
Okay. So before I get in the queue, if you could just elaborate on the strategic transformation plan that you are currently executing and connect it with what those initiatives are going to lead to, because if you're going to grow at 20-25% CAGR, then you should be hitting 400 crore top line in 2029.
Right, correct. So you are
definitely want to understand how the transformation plan is going to play out year after year. You're already at 22-25 crore monthly turnover. From Jan, at least, we are going to see that trend, as you indicated. So, a little bit about the transformation plan, the newer products, the focus on exports, which geographies, that would really help us to get to that.
Definitely. See, like I told, there is one company from whom it's an US-based company, okay, and from them we have already started business, executed their first order, which was worth roughly around 90 lakh to 1 crore, and now they are repeating the order, and they have already given us the next purchase order, which is almost double that of the earlier PO, and they are interested. There is a good flow of inquiries from the same customer, and secondly, and that is all on value added items. Okay. So, and secondly, I recently visited US and met certain clients which should mature within a week or so. So there is another good flow. And as far as domestic markets are concerned, we have, like I said, there are 50, 60 big and small clients that we have added, 50 to 70. And, out of those, 3, 4 are really big names. And we have already started to cater to them. So, their demands are, all those customers that I am talking about, their demands are, their requirements, in fact, monthly requirements are much more higher. So no one, initially starts with big orders or something. They take the trials, they start with a small quantity. You are a supplier of 5-10% in their overall purchases. Then you increase that number, with your quality and delivery and services. You reach a level where you are supplying 50, 60, 70% of their supply. So one factor is that. So what strategic change I am trying to convey from here? Like earlier, it was a simple marketing scheme, like 5, 6, 7, 8 sales people who were producing sales, going to the customer and but now we have changed the approach. Now we are going with those companies. We are targeting those companies because see, we have got reputation in terms of our post listing. The credibility of company has increased and the reputation of the company has increased, and that we are leveraging properly to gain even better customers who are, renowned names in the industry. I also mentioned in the speech, when we supply our products to these companies on a regular basis, it automatically, enhances the image of the company. Okay, that you are supplying to this clientele. Then, 4 other players also come in and they are interested. Plus, the overall consumption of these reputed clients is so high that, until and unless you are supplying them with good quality and service, then their overall business increases. So it's automatically building the brand. So one strategy is brand building, and second strategy is that building, associating with the kind of clientele which can in future, which can be a loyal partner somewhere, and you get regular orders from them. So like I mentioned, you asked me earlier that what is the current order book size. Like that, very easy, said like 30, around 35 crore, because that is one big plus. Because when we were not listed and we were not going through this strategy, our order book size used to be normally at around 15 to 20 crore level. So there is a big jump in that. So that is somewhere due to the strategic shift that we have taken, that we are associating with clientele who are, acting more as a partner and not as just as a customer.
Thank you so much. Wishing you all the very best.
Thank you so much. Thank you.
Thank you. The next question is from the line of Santosh Kundapuram from Path to Wealth. Please go ahead.
Thank you for the opportunity, and congratulations, Nishant sir. I mean, we have been seeing your dynamic leadership, and you have been traveling across the globe, taking your company across the globe. So congratulations for all the hard work that your team is putting together. I have a few questions. As a retail investor, I really appreciate this investor call that you're doing. So hopefully, we expect this to be continued in the future as well.
Definitely, sir. Last time also we did, and this will always be a trend. In fact, certain people panicked this time that I am not doing a con call, but that was due to the holiday season and all. And we planned it as soon as everyone was back to office. From point of view of investors and everyone. So we did it today.
Sure, thank you. So my question, it's not a question, but it's a request. Is as a compliance, I think you have to publish like half-yearly results, which we understand.
Right.
But until you publish these results, right, retail investors, like small investors, will not have any idea about how the company is progressing. So, humble request, like if you can publish any order wins or any any significant business wins in the BSE or BSE side, that would be helpful for smaller investors going forward, because we have to really wait for 6 months to actually see what is going on, right? So that transparency would help for sure.
And see, in September, I added a note, kind of from our AGM. I published the outcome from my speech. Basically, they were the key developments of the company. I have got this suggestion from multiple people, and I think see, it's not possible to update it every time we are doing it. But I'll try that. Some mechanism can be built wherein we can give a summary of a new order book or something like that in every 2 months. So I'll work that out with the team and see how we can implement it.
Thank you, sir. Thank you for that. So we are seeing the margins around 9%, and we totally understand that there is a development cost and the company is actually integrating factories as well, I suppose. So we understand the margin being on the lower side, or maybe consistent with the prior periods. But to put number there, approximate number or something, do you think the margins will take a trajectory for second half, or will that happen from next fiscal year? Any guidance on that?
No, see, if we are achieving those, the kind of top figures I'm telling on a monthly basis, if we are able to achieve that within this half yearly, within this fiscal year, then financial year, within this financial year, then I think the bottom line should also improve in that kind of ratio. And definitely next year is I am quite bullish that next year is going to be far more better. So that's my reading on it, and I think maybe in this year also we should be able to get where we want to.
All right. One last question, sir, before I get back in the queue. So you have traveled a lot recently for your business change, maybe. Have you seen any recessionary trends? Because I'm taking this call from US, in fact. So we are hearing about slight recessionary trends in the housing market as such, and one of your I think product, the pneumatic nails, is mostly used in the housing sector. So overall, from the business perspective,
are you just interrupting? Sorry, are you asking it in a general trend way, or are you asking vis-a-vis our company's contribution to this?
So general trend is recessionary for sure. When I look at some of the numbers here, that's definitely there's some kind of slowness or recession. Right. But in respect to your company, right, you serve the auto industry as well within India. So auto industry or auto ancillaries are doing extremely well. So overall, from auto or the industrial sector, how are you viewing for this your company mainly?
See, first and foremost, right now where we stand at currently. See, Maiden Forging might not be contributing whatever product market it is doing, since we have multiple product lines, 8 product lines right now. If we combine all those markets and, the kind of contribution, the sales that we make, how much we cater, what size of a player we are in that industry, we won't even be, accumulating right now to 1% contribution to the overall market. No, I think it would be somewhere in points. So, the scope for us is very high. Definitely, there is a recession trend in US, what I have seen. There is a recession trend in Europe as well, and that is not current. That has been from last 6-8 months, during which time we have also taken a big growth. So, see, that is there. But since we are very small player right now in the overall global industry for our 8 product lines, so we have endless potentials right now. Because the kind of efforts that we are doing post-listing, that were never done before. And somewhere I see that, when you make efforts, the results start to come. I was expecting it late, but they start to, fructify very soon if you are, genuinely working in the right direction, with a focused approach. So there is no question that there is a recession. But that being said, the optimist part is the domestic markets are quite, there is high demand in domestic markets for our products, especially right now. So there is a compensation effect. But that being said, we are already increasing the sales in export markets, and that is because right now total contribution of Maiden in the entire market is not that big, and we have lots of market to capture as of now.
Okay. Thank you for the information, sir, and all the best for your future.
Thank you.
Thank you. The next question is from the line of Prateek Chaudhary from Samarthya Capital. Please go ahead.
Sir, for our next leg of growth and expansion beyond what we can do from our current facility, would we be spending on capex, or would we go for a outsourced manufacturing model kind of a thing?
See, it would be, you can say, what I will say, it would be a mixture of both. Okay. We have to, we constantly, like it is, I think, part of the process that, whenever you are targeting at a higher growth and higher sales kind of thing, so we would be always doing pro and con thing for, whether we should go for capex and produce our own, and whether we should, outsource the thing altogether. Because it depends on various factors, like how critical is the component or product that we are producing. Then secondly, what costs we have to incur if we outsource, is can we let go some additional part to an outside party. So there would be multiple, pro and con thing that needs to be calculated whenever we are increasing. But yes, overall, if I talk about the long-term vision, it is we would be doing certain capex, like I said. For example, in the nail, right now we can produce 300 tons, up to 600 tons, 700 tons. Surely we are doing the capex. We are doubling the capacity within our own facility because we have the space, we have the team already over there. But yes, looking at the long term, we have a strategic focus that we would be increasing after, like, for example, we reach 400 crores kind of top line within a year or two. Then definitely the future future strategy would be to increase further sales with keeping the model asset light and producing multiple more products through outsourced services.
And so for reaching 400 crore of sales, can that happen through our
that can happen in our current plant, with the condition that the main thing that I have done, I think we can reach about 450 crore sale also within the current facility.
Within the
current facility that we have, just with the nails expansion and everything, that already has taken into consideration, doubling of nails. The reason being, see, we have 8 product lines, and the machineries are capable, same machineries can produce carbon steel, alloy steel, and stainless steel. And our focus is primarily on the stainless steel right now. So when we go for stainless steel, the same product that we are selling for 60 rupees right now, the same machinery would be producing a product which will be selling for 260 rupees or 270 rupees. So that way we can reach around 455, maybe 500 crores as well. In terms of that, I'm not talking about the quantity right now.
Right. This is the value we can achieve, 500 crores approximately, from our existing manufacturing facility.
Correct.
Okay, sir. Thank you. I'll get back in the queue.
Thank you.
Thank you. The next question is from the line of Chinmay Rane from Cogent Finvest. Please go ahead.
Hello, sir. So you just talked about that the current capacity can manufacture the value-added product that can add to your revenue to the 450 crores. So
Sorry. Can you just repeat? Chinmay, can you just repeat? Sorry.
Yeah.
Your voice got a bit scrambled in between. Yeah.
Yeah. You just spoke about that our current capacity can be used to produce the high value-added product that will give you the revenue of around 450 to 500 crores. So what are our
Correct.
strategies to ship such a value-added product? What is the timeline and how is the demand prospect for such products?
Chinmay, thank you for the question. Like I answered in the earlier question also, see, we might have reached around 75% of the capacity utilization right now in terms of quantity. And the entire focus and the strategic efforts that were being taken from last 6, 7, 8 months, they are focused on value-added products, right? So whatever new client, like I told that 50 to 70 clients we might have added during this 6, 7, 8 months. And our focus, the marketing team is focused only on selling, or acquiring bigger clients who buy the value-added items. So we are focusing the lesser value-added items. Those sales are increasing on its own, like through when the customer comes to us. But our entire focus is, to acquire clients. We are going through the approval processes of multiple clients, out of which 3 or 4 have already approved us, and also approved our materials after taking the first 1, 2, 3 orders. So our entire focus is on upselling, that is selling the higher value added products. And the timeline would be approximately that in next financial year, the permutation combination of all our product lines would be in, should be in best optimum shape that we can get in the current capacities.
Okay. And so currently, how much our value-added product contribute to our revenue?
Currently, I have, I will have to cross-check. I think last year it was around at 15% or so, as far as I remember. I'm not, very sure right now, because I think I have, I calculated last of the investor call or something. So I think it was around 15%. But for the current, I will have to recheck. Right now, the number is not in front of me. Right.
Okay. So, and just wanted to understand, do we have any trade from the company, Chinese product for our product?
Sorry?
Do we have a trade from the Chinese product, the category in which we are present in?
No. We don't have any issues with Chinese products or anything right now, because I think on all our products that we are dealing it, and they are in semi-finished or finished form. So, there are heavy duties and everything on Chinese products in this particular line. And I mean, I am not facing any kind of, whenever I'm going for marketing or anything. Earlier, like 2-3 years back, I believe there was lots of, we had to hear that, Chinese product is this price and that price. But in recent past, I have, met so many people, and I don't think anyone claimed that, your product is expensive than Chinese product or something like that.
Okay. Please beg me a pardon if it already answered. What is our export contribution currently?
Export quantity like order book?
Contribution. No, it's a contribution to the revenue.
Sorry, I didn't get you.
Our export contribution to our revenue.
Export contribution should be, I think, right now it's about 10 to 12%.
Okay. And what are our plans for the next 2 to 3 years?
Sorry?
What is our plan to increase them in the next 2 to 3 years?
I'll not go 2 to 3 years down the line, but for next year, I think the export contribution should be around 25 to 30%.
Okay, sir. Thank you. I'll come back in the queue.
Thank you.
All the best.
Thank you so much.
Thank you. The next question is from the line of Bapodara Mayur, who's an individual investor. Please go ahead.
Hello, sir. Congratulations on good set of numbers. My question is regarding our receivables have increased and our operating cash flow for the first half is in negative territory. So what are the terms with our clients for the payment collection?
See, payment collections with our clients vary from advance payments, advances, upon dispatch kind of payments, before dispatch kind of payments, till 90 days. So there is a huge variety. For example, like I said that, we have added certain big names. So one of them is buying at 30 days. One of them is buying at 45 days. So that kind of payment terms we have, but they are all, A-rated companies and everything. So, we only give credit to new customers wherein there, the credibility of the company is very strong.
Okay, so going forward in second half, our cash flow, second half and for the full FY24, our cash flow from operations should increase, right? Should improve.
Should improve. Like I said, when Miraj asked me that, if for inventories and he specifically asked for inventory. So definitely right now we had to, grow rapidly, and especially when you are changing the product mix that you are selling. So we had to enhance the working capital for that. And once we achieve, the desired run rate by January or February, then we would be, going for the optimization of the working capital.
Okay. And sir, in pneumatic nail segment, what is the total market size, global and Indian both?
Oh, I think it is in some, I'm not very sure. Because I read all these reports like a year back or something, but it was in somewhere in some $1 billion, the global market size.
Okay.
So basically, the HS code is 7221, and approximately I can give you an idea that, US alone imports around 300 to 400 containers every month from India. And one container on an average is priced at 30-35 lakh rupees.
So who are other competitors in India apart from us who are exporting to the US?
There is one GK Wire, then there is one Astrotech. These two companies are major contributors to these containers.
Okay, sir. And sir, my last question is regarding. It's a question and also we can consider it a suggestion. So for growth of 20 to 25%, our cash flows also should improve, and
yes, definitely
should also improve, so that we would not have to depend on the debt or long-term debt for our growth.
Mayurji, that is the entire the entire motive of focusing on products which gives us higher margin is to create a strong reserves of the company, which can fund, the company can be self-sufficient and, fund its own expansions or in the coming future. That is the entire target on which we are.
Yes, sir. That's what I wanted to say. And sir, best of luck for the future growth and congratulations.
Thank you so much.
Thank you. The next question is from the line of Pranay Jain from Deal Wealth Capital. Please go ahead.
Yes. One, I went through the annual report and it alluded to about 4 products being in R&D, one at an advanced stage. So just wanted to understand what is our launch plan, how are we going to see it being introduced, and the opportunity size from these. That is the first question.
Right. Okay, so the 4 products which are in R&D. See, I think it will take much longer time than this call. So there is an investor grievance ID. Please send it to me on that, and I will be I won't be replying. Actually, there is a ready content for that what we are doing in written. So I can share it with you. But in short, I will tell you that I have also mentioned earlier that it would be like if there are 4 products, out of that, maybe one is, we rejected because it is not viable, or maybe it's not profitable, or it might cause us, gain its sale, it might require 2 years, 3 years, or such a long time, because it requires approvals and everything too much, and that might require higher costs to be incurred to get approved or something like that. So one of those products might get rejected. And if we talk about other three, like I said, they don't require huge capex. We can even outsource them because they are our forward integration. So we would be launching them one by one. You can say roughly like every half year we would be adding on a product. As of now, the pace as of now. Maybe it increases in future, like we are doing it quarterly or maybe 2 months. So as of now, the strategy is that we would be launching them every half year, right? And as far as what are the products and everything, we have the write-ups, because this IR call will be, it will take a lot of time to explain each and every product. So I would suggest that investor grievance ID is there. You drop us an email and we will revert you in detail. It's a 2-pager kind of a thing.
Sure, I will send the mail. But my second question is on your tier 1 and tier 2 clients, if you could give us a flavor, because from my understanding,
if you could give us a
flavor of your T1 and tier 2 clients, because from my last understanding, about a quarter of your business came from the auto clients, and you have many on the engineering and consumer durable side. So when you indicated a Fortune 500 client in US, just wanted to understand what we know that it's a very capable company and long-term visibility is fantastic, but if you could give us some names, so we just get a sense who are we partnering with, which are the kind of clients in US, Europe, or maybe later on in Australia, Africa that we are looking at. So we get a sense on auto, engineering, and consumer durables. What are we focusing in the next 2 to 3 years?
Right. This company is not particularly the one you mentioned that I mentioned in the AGM summary, right? This particular company isn't into consumer durables or engineering or something like that. It is basically a listed New York Stock Exchange entity that is having warehouses around the globe. And it is, providing B2B commerce services for most of the ferrous and non-ferrous items, finished items. One of the biggest in the world. So, it buys all kind of products that Maiden produces, especially the value-added ones. So we have associated with them. And if we talk about the domestic, one of the biggest names that we have added in the current 6 months is into industrial construction, basically. One of them is into that. So you can say maybe somewhere, linked with engineering sector. And
out of the 50-60 we've added in the last 12 months, which are
no. I am telling you the major ones. I am telling you the big ones. I am just telling you, giving you a hint of the big ones that we have added. So the global player is that one, the first one that I mentioned, and a major domestic player that we have added is the second one. And third, we are at a very advanced stage, and I think within November we should finalize it. It's a very reputed German name. Okay, and it's a wide group. It's into auto as well. Okay, so it's a very big group. So everyone knows it. So it's a big group, and it's into engineering, it's into auto, tier 1 kind of a thing. Okay, it's also into engineering. So development of various kind of items. It's a global brand coming out of Germany.
All right. Thank you. And as per the suggestion given by one of the participants earlier, I just wanted to reiterate that leading companies generally update on their order inflows once a month at least. So if you could consider a similar practice.
Yeah, I would try to do it twice a month right now. Not twice a month. I mean once in 2 months at least. Okay, like I said, I will work out some mechanism how it can be done with the team. And secondly, through you, I am actually conveying to all the people, all the participants of the call, that please, whatever suggestions, questions, whatever you have, please send it to our investor grievance ID given on the website. We are very active on that. You will, I often get, when I reply to those emails, I often get feedback from the investors when they meet me that, other companies generally don't reply to those investor grievance mail IDs, the mail sent on them, but we do. And they appreciate that also. So I want to, say, like, whatever queries you have, you can send it through that. And other than that, I will definitely make a mechanism that I try that, every 2 months we can give you the order flow and everything, any new developments. Maybe a letter.
Thank you for these efforts.
Thank you.
Yes. You may add maybe any client addition or any market entry or product launch also from time to time.
Definitely.
Give us
Definitely.
points of our efforts.
Definitely. Thank you. Good.
Thank you. The next question is from the line of Miraj from Arihant Capital. Please go ahead.
Yeah, thank you for the opportunity again, sir.
Welcome back, boss.
Thank you so much. So just a few round-up questions. First is the capacity that we currently have. How much would it be excluding the capacity that we are adding from IPO proceeds?
Sorry, I didn't get the question, Miraj.
So in from IPO proceeds, approximately 8 to 9 crores we were spending to add some machinery, which is, I think, they're taking a capacity from 250 tons per month to 500 tons per month.
Right.
So
250, 300 to 500, 600 kind of. Right. Almost doubling the nails capacity. Right.
So that would be only in the nails part, or is that our entire capacity?
Nails part.
Only nails part. So our current and total capacity excluding this would be how much, sir?
Excluding the nails that we have already implemented?
Yes, sir.
It should be around 4,000 tons.
4,000 tons per annum, right?
Right now, you can say the overall capacity consumption right now would be at 75-76%. The current.
Sorry. Please come again. I missed your voice.
The current total capacity. See, I have told Miraj on various other platforms as well earlier that we have we can always replace one machinery's utilization from low value added products to higher value added products, right? So it's exactly calculating the volume would be very tough, but when we got listed, at that time we were utilizing approximately 67-68% of our capacity, and right now we are utilizing around 75-76% of our capacity.
Okay, got it. Right. Okay,
I am talking about the current month. You can say maybe from September and October.
Okay, from September. Okay. Okay. And so I'll just round up a few questions quickly. So the own brand versus white labeling that we're doing in US that we started, could you just brief up how that is going over there for our own brand as well?
See, for now we are not doing the own branding in US specifically. The reason being we are now associated member of STAFDA, right? And there are so many distributors who are interested to buy huge bulk quantities from us, right? So we are still figuring out that how can we go for selling our. We are doing it in Canada, right? But we are doing it in for Europe. But for US specifically, because there the consumption is very high and there are few very established distributors who have you may say 40-50 warehouses across US. So one or two of the distributors to whom we have associated and we expect a good business, it can affect us negatively in terms of relationship with them at the moment. This I recently, when I went to USA last week only, before Diwali, then only we had a word with them, and because it's very necessary, if we do any such effort, we do it with some of the local distributor over there.
Understood. No, that's understandable.
We can't aggravate the current customer base that we have over there already.
Absolutely. Right.
So, yeah.
So, the next thing is that one of our plans, which we wanted to look at, was oil-tempered wires. That was based on certain achievements, certain target achievements. So, are we still with our plan to spend?
No. We had to. I think in the last call I mentioned that we, like I said, that there are 4 products that are under R&D, and oil tempered is one of them. Right, but this is a product wherein we just got listed, and we can't start with that product immediately. The reason being for its development. Once we do the capex, right, for its development, we would have to incur very high costs, running costs for at least a year, till the time our product doesn't get approved in some major ancillaries. So we have right now, what we did was, when we were doing some strategic planning, we as per the calculations, we have chalked out that right now the pneumatic nails business, the stainless steel and specialty steel business, specifically specialty steel business, that is far more lucrative for making company strength, for strengthening the company's basics and the general reserves through sales of these specialty steel items, and these are some markets that we can gain immediately and without doing much capex. So right now we are focused on that, and maybe in the next financial year we will replan for the oil tempered wire. Basic one is that there are far more better opportunities right now than starting with the oil tempered wire.
Understood. That sounds plausible, sir. And just my final question is that on the plan that we had to merge the 2 plants, is there any progress on that side, or?
Yes. Right now there is a huge progress, and maybe if things work out rightly, then within a 1 month or so I can announce the proper plan, like what we are doing.
Understood. Perfect.
Yeah. Because earlier, like I think last time when we had interaction in the investor meet or something, I told that I had I am not doing it in the panic, but yes, a right thing has clicked right now. As of now, that is looking lucrative, and all our terms and conditions can be fulfilled from that land. So we are looking forward again to work that out at an earlier.
That sounds great, sir.
Just chalking out the detailed plan. So once everything falls into place, then definitely I would be announcing the same thing.
Absolutely. That sounds really great. All the best, Nishant, sir. We're very happy with you leading the team, and we're wishing for the best for you and the team's performance. All the best, sir.
Thank you for the support always. Thank you.
Take care.
Thank you. The next question is from the line of Prateek Chaudhary from Samarthya Capital. Please go ahead.
Sir, like we will be expanding over the next 1 year or 2. Where do you see our debt levels? Because you would also require
debt levels would be debt levels would be reducing. See, there are 2 things that I think most of the people are forgetting to take into consideration while seeing the cash flow of the company. First and foremost is that we haven't utilized the entire fund that we got from listing, and that would be utilized over time as and when we are expanding the sales. Secondly, the company's profitability overall is somewhere, I think by the next year end, it would be sufficient. It should be sufficient to, fund the expansions that we are doing currently. And, so the overall debt, if you talk about the ratios, the ratios should improve. Maybe the sales go up to a higher level and the debt level remains same or reduces slightly. So for example, if we are making a sale of say 350 crores and the debt level is the same as current, then also ultimately we have, in absolute terms, we have reduced debt. So that is how I expect that the debt level should be in the future.
Right. And in the previous participant's question, you were speaking about I think it was not very audible. If you could repeat on what were you telling about the land deal?
Oh, okay. That I was telling that, he asked me that what was the, what are you doing on the consolidation of plants and everything. So I told that, in my earlier course, I told that we are, looking out for land, and we are not doing it in a, panic like I said, that we have to do it immediately because it's a big deal. So right now, just before Diwali, something has come up which seems lucrative and suitable on our terms and conditions. So we are working that out with the other party. And once the things are chalked out properly, maybe in a month or so, I announce like what has happened if things materialize.
Okay, sir. Thank you.
Thank you so much. We would take that as our last question. I would now like to hand the conference over to Mr. Kaushal Shinde for closing comments.
Thank you everyone for joining the conference call of Maiden Forgings Limited. If you have any queries, you can write us at info@greenadvisors.com. Also, the conference.
Thank you. On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you, everyone.